So my next guest sees a number of silver linings in news and developments that are actually dominating the headlines. Joining me now, TrendMacro Chief Investment Officer Don Luskin. And before we start, we do have a Fox business alert for you. We've got to pull out the Luskin button indicator because I haven't seen you with one open button in a while, Don. That's typically bearish. What's going on? And by the way, I also noticed they took the sword away in the background, so I'm a little worried about what's happening there.
Well, I put the sword away because I wouldn't want any terrible accidents to happen should I happen to turn bearish. However, I am happy to tell you I am not turning bearish, no matter what the button indicator seems to indicate.
Okay. And one of the reasons is, like, you know, that CPI, spike in inflation, those kind of things, you just kind of look at them as being just bumps in the road toward an eventual, you know, the inflation picture really, or crisis not being as what other people think it is.
Well, in terms of the sentiment of the American consumer, inflation's an issue, but it's not inflation exactly. It's affordability. Prices are just way higher than they were 3 years ago. Inflation, as a rate of change instantaneously, this month versus last month versus last month, that's pretty much calmed down to normal. But we're not back to 2020 prices. You know, hamburger would have to come down, you know, $2.50 a pound, you know, to get you back to that world. So even though inflation has remarkably cooled, everybody still feels horrible about it because you can't afford anything.
So then what's the solution there? Or does it even matter from an investor's point of view?
Well, I don't think it matters from an investor's point of view. You know, stocks and bonds are forward-looking. This is all in the past. This has all been digested. In fact, you know, if one of the things that stocks were hoping for was for just a ton of Fed rate cuts, I've got some really amazing statistics to give you. Right now, the money market curve says there'll be 2 rate cuts all the way through January of next year, 2025, just 2. At year end, it was saying 7. So we've gone from 7 to 2. But stocks are up 10% in the meantime in just 4 months, right? This is amazing. This is amazing. And that's because the markets realize that it's one of those jokes. It's like I've got bad news and I've got good news. The bad news is, oh, I'm sorry, the doctor can't see you for 9 months, so you're going to have to wait for your magic stimulus medicine. The good news is you're not sick. You don't need stimulus. You don't need rate cuts. The stock market is booming. The economy is booming. The labor market is booming right now with these rates. These rates are not prohibitive. Jay Powell keeps saying they are. Oh, what do you know? Jay Powell's wrong. First time that's ever happened.
So one thing, though, that I do know is that deflation is something that you've talked about as a possibility. I don't think that's on anyone's bingo card at the Fed right now. What would create that? What would create that situation?
Well, for the first time in the modern history of the data that begins in 1959, the M2 money supply is contracting. And changes in the money supply are highly correlated with a lag. You have to wait for a year and a half to what inflation is going to be in the future. So when the money supply is contracting, that points at the very least to low inflation and possibly to deflation. Now, the economy has a lot of inertia and a lot of momentum, so actually getting deflation is going to be pretty hard to see, but that is what any sensible model would forecast. And in fact, if you look at just the goods portion of the consumer price index basket, so that's about 40% of the basket, so I'm excluding services, just looking at goods. That's been an outright deflation for a year. So it's not like it can't happen. It just has to happen to the rest of the basket.
All right, we got just less than a minute to go. In that respect, then, ride this market, stay in the market. Is there any particular area that someone's concentrated in, or just be exposed to the broad market?
Well, I think at this point, just be exposed to the broad market. I'm very happy to see that over the last 3 or 4 months, there's been a tremendous broadening where the broad market actually is the broad market again. It's not just 7 stocks. It's not just growth, it's value. It's not just large cap, it's small cap. So we've had a lot of normalization where you're not going to get punished for just investing broadly. You don't have to invest in NVIDIA to make a buck now.
All right, sounds good. Hey, Don, always appreciate these conversations. Talk to you again real soon.
Thank you.